Hi guys, Will here from WB Trading, and in today's video, if you're a trader who loses money, what I'm about to reveal for you is going to be a true game changer. It really is. What I'm about to share with you is actually a module from inside the mindset and understanding section of our Platinum program that explains exactly why most traders actually lose money. And it's almost certainly not what you'll expect either. Make sure that you watch the whole video right to the end today, because everything that we will cover is critical if you're to become profitable as soon as possible. And just very quickly, before we dive in today, if you are struggling with your trading or you'd like to know more about how mechanical edges are traded, I've actually put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link to that in the description and you can click through and watch that straight away. Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that we share with the trading community here on YouTube. Okay, so to begin with, before I share the module with you, again, taken from the mindset and understanding section of our Platinum program, I just want to show you where this is located inside the program itself. So if I just share my screen here, this is the inside of our Platinum program training portal. And if you look to the left-hand side, so the contents bar over here, this is where our clients begin when they join us. And I'll just very quickly run you through the journey that our clients go on as they become profitable traders with our help. So the first thing that they do is download our program checklist, and this just maps out the journey through the program itself, when and where to book in their one-to-one coaching sessions and so on. And then they move in to our welcome, structure and help video through our new accelerator beginners course if needed, and then into two crucial first sections. Okay, now one is our mindset and understanding section, where they really put a solid mental foundation in place. Without this knowledge that we actually cover here in our mindset and understanding section, and the framework and structure section too, just below that, it's almost like building a house without a foundation. It's just not going to stay up when it's built. This knowledge within these sections are, for actually a lot of clients, the real breakthrough. And after those two sections, of course, come the strategy sections themselves, which lay out how I found and built each of the four key strategies that I trade, how edge is actually provided by each of them, the mechanical rules behind each edge, and so on. And this is where the true transformation happens for our clients, when they finally learn a genuinely profitable set of rules to actually follow that provide an edge. And in fact, one of our newer clients said this to me recently. He said, "Will, before finding you, I felt like I was trying to assemble furniture without the instruction manual. I came to you to actually be handed that instruction manual for the markets." And I think that's such a great analogy, because it's true, isn't it? Most traders out there are attempting to build their furniture without instructions. They're attempting to build a house without first laying a foundation, without a blueprint. And my Platinum program, it is that foundation, it is that blueprint, it's that instruction manual, really. It's go to A market, look for B, and then do C. It's take the trade at X, place a stop loss at Y, and place a take profit at Z, and walk away with the confidence that you've done the exact right things in order, and most importantly, with mathematical proof behind each step too. No, should I be in the trade I just took or not? No, is my stop loss or take profit even in the right place? Again, no trading without a strategy, without an edge, without the instruction manual, right? Because if you're trading that way, what you're really doing is trying to assemble the most complex piece of furniture on earth, the financial markets, without an instruction manual, right? But after going through the Platinum program, you will know everything. You will finally have that instruction manual to actually follow. But anyway, coming back up to the top, what I want to share with you today is the trading is just inputs and feedback video. from the mindset and understanding section, because again, if you are still losing money unnecessarily, this video is going to just be a game changer for you, an absolute game changer for you. So let's get into it. Let me share the module with you. Just before I do, if you want to book in a call with me or a member of my team to discuss joining us as a client and learning our mechanical edges, I'll pop a link to our calendar in the description for you as a helping hand. Anyway, here's the module for you, and I really, really hope that this helps. Trading is just inputs and feedback. So here's what we'll cover. We'll start by covering the input actions feedback formula, which will actually explain why having a consistent input as a trader, i.e. the trigger, so to speak, that helps you know when to actually take a trade, is truly make or break. And when you fully understand this, you will finally be clear on why having measurable rules in place is not just important to consistency of profitability, it's actually critical. From there, we'll discuss actually actioning Edge via probabilities using the input actions feedback formula, and you'll finally be completely clear on how and why just simply repeating the exact same strategy over and over without any changes through both the wins and through the losses over the long term leads to the ability to consistently pull money out of the markets as a trader. And after that, we'll discuss how by changing your historical work pay mindset, you'll gain profitability and consistency that will last for years to come, along with finally being able to just let go of that whirlwind of emotion that floods most traders and leads to self-sabotage. So let's start with the input actions feedback formula. So when you take a trade, you're acting on a trigger, and this trigger may be, let's say, an emotive decision, or it may be based on a decision you've made using either technical or fundamental analysis, or it may be a decision you've made using a statistical model, i.e. a strategy that you've built using statistics. Whatever the trigger, or in other words, the input, this always creates an action followed by feedback, or in other words, a reaction that is either profitable or non-profitable, both in the short term and also, perhaps most importantly, in the long term. Okay, now what many traders don't understand is, in the short term, let's say within 10 trades, 20 trades, anything can happen. In the long term, however, the reaction, which will either be profitable or non-profitable, will then begin to be delivered in the form of a mathematical probability, i.e. edge. In other words, you're able to understand the feedback that your input is actually causing, and better still, you're able to affect it by altering the input, which you'll learn later on in the program. Now, don't let what I've just said overwhelm you. Let's look at an example together below. Firstly, let's pay attention to the input, which in this case is a trend line break, a common piece of technical analysis, isn't it? So the first question to ask is this the same every time it happens? Or in other words, can I rely on the input being consistent and being the same each time? The answer in this case is no, because every trend line is drawn differently, and therefore the input is inconsistent, which causes a problem. Because it means we're unable to rely on the action that we're actually taking, i.e. the inputs we're using to create the feedback that we're looking for, that being a profitable trade. So with that being the case, because the input is unreliable and changes every time, this means that the following chain of events is equally unreliable. Let me share an analogy to help you understand what this means. Let's say you're a train operator, okay, and you run a train that collects passengers from London Central Station at 1 p.m. every day. People are going to start waiting for that train at 1 p.m., aren't they? If, however, you have no schedule, no one will ever know when to be there waiting for that train, will they? Again, the input here is unreliable and changes every time, which means that the chain of events is also unreliable. And because of this, no one knows what will happen on any given day or at any given time. Things should be starting to become slightly clearer now. So by trading using discretion, you're actually changing the input every time you take a trade, which is unreliable, which in turn means that the feedback is equally unreliable. On the other hand, let's say that as a fictional example, every time price broke out of a 25 period high or low, you then execute, i.e. this triggers an action and you take a trade, which then also triggers feedback, for example, a win or a loss. Because the input here never changes and the action doesn't change either, this creates feedback that is reliable, measurable and repeatable too. Those are the key words here: reliable, measurable and repeatable. And what do these lead to? Consistency of actions and of results too. Now, as traders, we want to know, and it's critical that we know, that the actions that we're taking, our input, i.e. the trigger that causes us to take a trade, is actually accurate, that it's going to result in profits being generated over the long term. Again, if our actions, i.e. our input, changes every time we take a trade, we have no idea if our actions are actually causing either profitable or non-profitable reactions. And we call this profit, or a lack thereof, the feedback generated by our machine, our system, our strategies. Now, the problem is the majority of traders out there do not have an accurate, consistent input, and therefore the feedback that their actions actually produce are, in almost every case, negative, resulting in consistent losses, whilst they have really no idea why. The good news is, however, you now know why. It's because they're lacking a consistent, repeatable, measurable input. Now, we have to verify that our strategy, i.e. our input, actually creates profitable feedback using statistics, which is actually why below each strategy that you'll learn later in the program, we've actually pre-built this data, this statistical proof for you. Ahead of moving forwards though, let's just circle back around to the first point that I made. Again, what many traders don't understand is, in the short term, let's say within 10 trades, 20 trades, anything can happen. In the long term, however, the reaction, the feedback created by the input that you're using that actually tells you when to take a trade will either be profitable or non-profitable, delivered in the form of an edge over the market, or of course a lack thereof. Now, the good news for you is you'll not only be learning the exact mathematically proven inputs you actually need to produce that profitable feedback consistently later in the program, all mapped out for you, but again, we've pre-built the checkable, verifiable trade data for each strategy for you, so that you can see directly inside systems that work, along with taking these and implementing them yourself, which means that you will finally have that edge over the market that's needed. So let's move on to actually actioning edge via probabilities. So let's look at a simplified example of two batches of trades, one taken with and one without edge. So as ever, in the short term, anything can happen. You'll have wins and you'll have losses due to the sample size being so small. Whatever your strategy, whatever your inputs, the feedback produced will not be statistically significant until you've taken, let's say, 50 trades, 100 trades, and so on. But what happens as the sample size of trades actually grows? Well, let's take a look. So below, you can see on the left, we have a batch of trades taken without edge, and on the right, we've got a batch of trades taken with edge. And if we just skip forward by one slide, you can see that a trader with an edge tends to see their trades remain relatively balanced. And this is due to the positive expectancy, the mathematical probability of success behind the input that they're using. And thus, their feedback, i.e. the trades, both wins and losses, remain much more consistent, much more predictable, right? On the other hand, a trader without an edge sees their trades remain varied, remain unpredictable. And this is due to their input, again, like we covered earlier, being random. And therefore, their feedback is equally random, leading to their, unfortunately, profit and loss also being random. Now, this is, of course, a simplified example, but when you begin trading with Hedge, after you've taken in the entirety of this program, you will begin to see that as probabilities play out over the long term, and as you carry on implementing the same reliable, repeatable inputs, along with generating the same reliable, repeatable feedback, the markets are not as random as you once thought, and it is going to be a real breakthrough. It really is. Much like the casino example from earlier in the course, when you have an edge, all you have to do is repeat the same inputs, the same ones that you know produce profitable feedback time and again, and the money will, over the long term, take care of itself. Now next, let's talk about the equation of longevity. Okay, what I want you to understand is everything is a system. So as an example, we have the ecosystem, don't we, where plants, animals, weather and so on all work together. We have the social system, where people interact with each other, form groups of friends and work together, and so on. And we have the solar system, where the sun, the moon, all of our planets work together, and so on. Now, to bring things back down to earth, we also have cars, okay, which are made up of mechanical parts that are all predetermined, all pre-tested, and that are all then assembled, leading to an end result, a machine that a human can get in and drive, right? We also have our human diet, which is, again, made up of parts, made up of ingredients. So when a diet is built in the right order, in the right portions, i.e. X amounts of protein, Y amounts of fats, it produces a beneficial end result, health. And trading is no different. And the markets are, in and of themselves, a system. Just like the ecosystem, the solar system, the social system. We must have a system in place that allows us to extract profits from the markets. But we've discussed inputs and actions and feedback already, right? So why am I repeating myself? Well, there's one other critical system that many humans are tied into, like a spider's web. The work pay system. The do a job for somebody else and receive a paycheck across a lifetime system. And as a trader, this will get you killed. See, many traders approach the markets with a I want to make money and lots of it instantly mindset. Let me ask you a question. Would you prefer to make either no or little money now and none in the long term, or little or no money now but a hell of a lot of money in the long term, consistently across a lifetime? The majority of traders unknowingly actually choose the former. They come into trading and they either get lucky, make some money and then give it all back, or they simply empty their account and quit altogether. They aren't thinking long term. They don't know what Hedge is. And truthfully, they're coming in with that work pay mindset, which isn't the mindset of a trader who's about to build a career as you are yourself. They're expecting trading to be much like a job, i.e. work or trade for a day, get a day's pay. Work or trade for a month, get a month's pay. Right, straight into the bank balance, sure as day. And for most people, this cycle is so deeply ingrained that it almost always prevents them from succeeding as a trader. But why is this? Well, it's because trading is completely different. The markets don't always pay us on certain weeks or even certain months, and professional full-time traders, they have down weeks, they have down months. And a friend of mine, I won't name him of course, but he's been trading full-time for just above 10 years now, 10, 11, 12 years. He even had a down year last year, his first of his career, and again, he's a full-time professional with over a decade of experience. So think about it. If he has bad weeks and bad months, as all professional traders do you think you might have a down week or a down month? Absolutely you will. But equally, you'll also have up weeks, you'll have up months and all the rest. The difference is when you begin trading with Hedge, when you lose, you'll only ever lose small. But when you win, on the other hand, with Hedge, you're always then put way ahead via these periods. That's the difference. Unlike the majority of other traders, you now understand this. You respect that you're not here to learn a hack or some kind of throwaway strategy. You're here to learn how to act and to think like a professional trader so that you're able to make money over the long term for years to come. That is the equation of longevity. It's patience, it's Hedge, and it's a move away from that job mentality, that work pay mentality. whilst it will destroy other traders' accounts, now that you know about it, you know how important trading long-term, thinking long-term is, it won't destroy yours ever again. It'll actually do the opposite, allowing you to build yours from here on in. You won't be that work-paid mindset trader who learns a strategy, learns a new system, has a bad week or a bad month and throws in the towel, and who goes off looking for that holy grail ever again. You're past that now. As you begin trading with Hedge, you're about to begin breaking away from that job mentality, that work pay mentality. And one great way to ease the transition is by starting with either a small real money account or even a demo account to remove the pressure of live capital whilst you learn and whilst you grow. There's no need to put undue pressure on your shoulders from day one. Learning a new skill, it's hard enough, isn't it? So pace yourself. Win small now, win big later. See that bigger picture, think long term, and you will always come out ahead. Again, don't think per day or per week or per month, think per quarter, think per year, and you will be amazed at the results that follow. You really will. So let's recap what you've just learned, because I know that this has been a slightly more complex video, and if you have to, rewatch it just once more, and I'm sure that after that it will begin to click for you. So we've covered why having a consistent input, i.e. the trigger that makes you take a trade, is so important. Because if you vary your trigger, then you vary your feedback, which leads to inconsistency, randomness, and confusion. We've covered the importance of statistically verifying your input to make sure that it will generate a positive outcome, i.e. profitable feedback. We've covered trade batches and how whilst every strategy will bring both wins and losses in the short term, in the long term, i.e. 50 trades, 100 trades, we begin to see our Hedge deliver the positive outcome that we're looking for. We've covered how by letting go of that work pay mindset that is so deeply ingrained within most humans, and by simply executing flawlessly and consistently with Hedge across the long term, you'll never have to be subjected to that whirlwind of emotion and the subsequent self-sabotage that most losing traders force upon themselves. And believe me, whilst you're only part way into this program so far, from a mindset and an understanding perspective, by understanding trade batches, by understanding inputs and how they relate to feedback, and by therefore understanding Hedge, you are already way ahead of the vast majority of other traders out there via what you've just learned. And with that, let's move forward. Hit the next button below this video and let's move to the next module together.